I believe MicroStrategy will be one of the largest companies in America because of its Bitcoin holdings. So it's about 100 billion market cap today, 15 billion of debt, so 115. If Bitcoin goes to 2 million, then that's going to be a $2 trillion company. And it's because of its holding of Bitcoin, no different than an oil company. I think Ethereum can reach 60,000 per token in that world. And that would proportionally benefit the DATs because Ethereum's around 4,500 today. So a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world. And many would become multiple hundreds of billions of dollars of market cap.
In the next phase of this cycle, Bitcoin will surge past $2 million. Ethereum will break $60,000. MicroStrategy will rise into a $2 trillion giant, and Ethereum-backed balance sheets will flood into the hundreds of billions. All of this means that the digital wealth transfer is only just beginning. That's the latest prediction from Tom Lee, CEO of Fundstrat. Lee believes we're standing at the edge of the biggest revaluation in financial history. As liquidity floods back into global markets and institutional demand accelerates, he expects Bitcoin and Ethereum to move faster and higher than most analysts can model. In his view, MicroStrategy's Bitcoin position gives it leverage unlike any other company on Wall Street, a balance sheet that expands automatically with every leg up in Bitcoin's price. And just as MicroStrategy benefits from Bitcoin's rise, Lee expects Ethereum-backed companies and digital asset treasuries to see similar exponential growth. Make sure to stick around until the end of the video as Tom Lee breaks down the data behind his latest predictions. Before we jump into it, just a quick reminder, only a small percentage of you watching are actually subscribed. If you're getting value from the videos, hit that subscribe button. It's free, it supports the channel, and you can always change your mind later. Now, here's Tom Lee in his latest discussion with ARK Invest CEO Cathie Wood.
So there's power law at work, which is, there is a level where if an entity owns too much of a network, they actually have a negative effect because they're crowding out innovation. We spoke with few researchers, including Fundstrat, and then folks like Jeffrey Kendricks at Standard Chartered. 10% is actually still an acceptable level, because if you think about even in any competitive world, if someone has 10% of a system, they aren't in control of it. There's, I don't know if you remember the Herschel Herfindahl HHI index. And if you run that calculation, especially with 70 DATs, and then in DeFi, it's not a concentrated market. It would still be considered highly competitive. So I think up to 12 million Ethereum tokens isn't crowding, and that's double Bitmine's target. Besides Bitmine, however, as you know, other crypto treasuries have not even been able to secure 1% of ETH. And part of it is that you need the public to provide you the trust through the velocity and trading volume of the stock in order to get there. So I think that there isn't going to be DATs controlling 50% of the Ethereum network.
Right. But what is it like? You're saying it's okay for a single entity to own 10%, and you could have other DATs like down stack. So collectively, it could be something like 15 or 20%, maybe.
Yeah.
I mean, does that sound?
It's still a TBD. Because, for instance, Bitmine is now actually, believe it or not, I think the 470th largest company in America in market cap. And if you look at staking, because we'll announce our staking solution very soon, but assuming a 2.79% yield on a pre-tax net income basis, it's like the 800th most profitable company in America.
You say America, Tom, do you think, because we've seen Metaplanet in Japan and strategy here.
Yes.
Do you think this is a regional phenomenon? Or, because I've always thought of crypto as a global phenomenon, but because you're introducing TradFi and DeFi, maybe this is a regional phenomenon. Do you think?
I think you're right. It will be global because Bitcoin and Ethereum are held globally. And Metaplanet has certainly shown it's super differentiated in Japan. But the dynamic is the same because Bitmine and MicroStrategy will soon be Russell 1000 constituents. MicroStrategy already is. So that opens up to passive index flows because that means now 1,700 large cap managers now have to make a decision on whether to overweight, underweight the 480th largest company in America. And that's why Bitmine, I think, could actually have accelerating flows next year and support.
It's so interesting to watch this because, the idea that indexation is going to be a phenomenon here is mind blowing to me because, when we first started this journey in 2014, 15, we were considered raving lunatics. And even within the last few years, they were able to hide behind regulators who were hostile. It's really only now, and it's 2025. For the first time, index players are going to have to make this, or benchmark sensitive players, I should say, are going to have to make this decision. That's so interesting. It's going to force education into the market, kicking or screaming.
That's right. And then we already have crypto native companies like Circle and Figment and Bullish that are actually highly profitable and in some ways more attractive than the traditional counterpart. And so it is a very different world today than it was when MicroStrategy took the bold step of buying Bitcoin. As we try to offset wage loss from AI, we will want to have a record of taxing agentic activities to replace that lost revenue. And that's a huge accounting system that is really working on public chains. And so, so 27 trillion seems very reasonable, maybe low. We have to think of Ethereum as the monetary base and the standard. So let's say I'm being really theoretical, in a quote world where the L2s pay zero gas fees, to the L1, which is not true.
Mm-hmm.
The fact that Ethereum is the monetary base would actually accrue value to it. It's the same reason someone's saying, hey, look, we trade stocks all day and it's quoted in dollars, but we don't pay the US dollar system to exist. We'd be
right.
The fact that NVIDIA trades in the US helps the dollar. So that's why even if there was no exchange between the two, it accrues value. But of course, we know that they're trying to fix that. And so L2s want to support L1s. And of course, in the future, any bank that is going to be building on the future of Ethereum is going to be staking Ethereum as well. I believe MicroStrategy will be one of the largest companies in America because of its Bitcoin holdings. So it's about 100 billion market cap today, 15 billion of debt, so 115. If Bitcoin goes to 2 million, then that's going to be a $2 trillion company. And it's because of its holding of Bitcoin, no different than an oil company. I think Ethereum can reach 60,000 per token in that world. And that would proportionally benefit the DATs because Ethereum's around 4,500 today. So a 15 times increase plus the NAV expansion. So there would be a lot of upside in the existing Ethereum treasury stocks in that world, and many would become multiple hundreds of billions of dollars of market cap.
As more layer 2s evolve, banks and institutions building on top of them will also need to stake Ethereum, further reinforcing its scarcity and demand. Lee ties this directly to his 2030 outlook. A $60,000 Ethereum, $5 trillion in digital asset treasury equity, and companies like MicroStrategy reaching multi-trillion valuations as Bitcoin and Ethereum redefine corporate wealth. Now, let's go back to their discussion.
About 3 months ago, so 12 weeks ago, I became chairman of Bitmine version and led a transformation, as you point out, where the company went from being a small Bitcoin miner to one where it continues to mine Bitcoin on a very small way, but now its primary treasury asset is Ethereum. And in the ensuing 12 weeks, we've become the largest holder of Ethereum in the world. Today, we announced 2.8 million ETH tokens, which is, with the cash on hand, it's about $13.5 billion worth of crypto. I think that 2025 is showing you that DATs are coming into existence really because the foundations and the crypto community actually need them. But going back to Kathy's question about like why 2025 for Ethereum, the Bitcoin and MicroStrategy's 2020 pivot made a lot of sense because Bitcoin was only 11,000 at that time. And he represented the sole way to get exposure to Bitcoin for any institutional equity manager.
Well, except for GBTC, right? Because we were in GBTC.
Yes, but for a firm like Capital Research or T. Rowe, they're unable to buy a closed-end fund or an ETF or directly own crypto because their mandates require them to own a corporate equity.
I see.
So Overstock was probably the only way someone could buy Bitcoin in the past. And then MicroStrategy came along. So MicroStrategy is almost 2.0 as Bitcoin treasury. What he's done successfully, of course, is really to upscale it so rapidly because he went from having $2 of Bitcoin per share to over $250 per Bitcoin share per MicroStrategy share today. So he has created enormous shareholder returns because the security business, of course, has continued to really muddle along at basically zero growth. In Ethereum, I think the moment is really this year because this is the year that Wall Street and governmental regulations became friendly to think about rebuilding on the blockchain. And part one, of course, was the stable coins, and stable coins have really been the breakout hit in crypto. We coined it as the ChatGPT moment for crypto because it has become a breakout product and it has created two enormous companies, one being Circle, which I know ARK was an anchor investor in the IPO, and the other is Tether. Tether today is raising money at a $500 billion valuation and roughly 300 employees. That's about $1.7 billion of market value per employee. And so JP Morgan, who just $869 billion, has 313,000 employees, or 2.8 million of value per employee. Tether is showing you a crypto native bank is fundamentally vastly more profitable. And that's what I think is happening on smart contract blockchains that are neutral, like Ethereum and Solana. But it really only could have started in 2025. Well, if I could rewind a little bit to 1971, in our chairman's message last month, we addressed how gold versus Wall Street grew post 1971. So 1971 was when Nixon formally withdrew the US from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street was created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, sorry, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold. post 71. Now, that is just our working theory because I am still a Bitcoin bull. So I'm very bullish on Bitcoin. And I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million, but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets. There is existential questions that'll emerge on proof of stake, but it's also, I think, going to happen with proof of work, because we know Bitcoin mining, for instance, is becoming concentrated in corporate. In fact, I think this year there was one mining operation that actually had won 6 successive block rewards, which is a high level of concentration. And as you know, as we get closer to 2140, the block reward is going to be so small that it may not provide the economic incentives to actually continue mining, which would represent greater concentration. So I don't know if at that point Bitcoin miners start to wrap Bitcoin to generate yield or other innovations. But proof of stake, you're right, is, because staking is an operational activity in security, if you have people reduce their staking, you weaken the security of the network. I think that's where the DATs are actually helping provide permanent capital, because collectively we are more than 3.5% of network. But Sharplink and Bitmine both want to get 5% of Ethereum. That's 10% held, and a few others. So if you end up with 15 to 20% permanently staked, that is going to provide, I think, a high level of security, because we will get slashed otherwise if we're not meeting our requirements.
Just as Wall Street overtook gold, Ethereum could eventually overtake Bitcoin in utility and value, serving as the settlement layer for trillions in tokenized assets. He still sees Bitcoin reaching between $1.5 and $2.1 million, but argues that the long-term opportunity lies in Ethereum's expanding role as the base layer of global finance. Do you agree with his predictions? Let me know in the comments. If you want to stay ahead of these signals and know exactly when the market's heating up or when it's giving you those rare buying windows, I break it down every day in the Crypto Nutshell, my free 5-minute daily crypto newsletter. You'll get clear signals on when to buy, when to take profits, and the latest news that could move markets, all delivered straight to your inbox. Just click the first link in the description, enter your email, and you're in. Anyway, guys, I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.